Cable is up 37 pips as we speak, but don't let that green candle fool you. What you're seeing right now on every chart is a textbook bull trap forming live during the London session. By the end of this video, I'm giving you 3 precise trading setups: conservative, standard, and aggressive, complete with exact entries, stop losses, and take profit targets you can deploy right away. Let's dive in Alpha Market Meridian, where we turn market volatility into consistent profits, and we trade price action we see, not hope for. I'm your host, with 15 years of institutional desk trading experience. Today we are breaking down pound sterling to US dollar, cable, live out of the London Open. Here's the plain bottom line. Pound sterling to US dollar is running a counter-trend rally trapped inside a larger bearish market structure. The 4-hour and daily timeframes are still firmly in distribution mode. This bounce from 1.3450 up to 1.3587 is purely corrective, not a fresh impulsive breakout. The critical multi-timeframe pivot sits at 1.3600 above 1.3600. I flip neutral and respect genuine breakout momentum below 1.3600, and especially below 1.3530, sellers regain full control, with a clear path targeting January's major lows. Don't let short-term green candles trigger emotional FOMO. Price moving higher. That's simply a better entry zone to sell into weakness. Let me walk you through exactly why this rally cannot sustain. We start on the 60-minute chart. This is where most retail traders get trapped into fake breakouts. As you watch the live London session chart right now, price has printed consecutive higher highs since yesterday's London Open. But zoom into the MACD, clear bearish divergence. The histogram is shrinking sharply even as price hit 1.35874. That's classic momentum fading at resistance. RSI 6 on the hourly timeframe reads 33.80, neutral to bearish, failing to push above the 70 overbought zone on this latest push. That confirms buying momentum is already drying up. Hourly moving averages MA5, 1.35662 MA10, 1.35481 MA20, 1.35128 MA60, 1.34616. Price is trading above all short-term MAs, but the MA5 slope is already flattening out, the first clear signal of bullish exhaustion. The 4-hour chart tells an even stronger story. The 200-period MA sits right at 1.3590, a massive institutional level. For 3 straight weeks, every time cable tested the 4H MA200, price reversed aggressively lower. Right now, we are kissing that level dead on. The 4H MACD is barely holding above the zero line, no bullish conviction whatsoever. Switch to the daily chart. Yesterday's close settled at 1.35373, still below the daily MA50 around 1.3548. Today's intraday spike to 1.36430 is nothing more than stop hunting above prior swing highs. We are not yet closed as a shooting star candle, but watch the daily close closely. Any settle below 1.3580 confirms strong rejection at resistance. The weekly chart paints a clear descending channel originating from the July 2025 highs. We remain locked inside that bearish channel, with 1.3700 marking the hard channel top. We are nowhere near a legitimate trend reversal to the upside. Let's lock in key concrete levels you need to trade. Intraday resistance 1.3600. Psychological level plus 4HMA 200 confluence 1.36430. Today's intraday high 1.3700. Weekly descending channel top intraday support 1.3530. Yesterday's close plus minor pivot support 1.35130. Hourly MA20 plus London session low zone 1.34616. Hourly MA60 major support 1.34133. Strong daily structural support. Ideal scalp by zone Y is cable bouncing higher today. Despite bearish technicals? 2 simple catalysts. First, the US dollar is taking a minor breather across majors. DXY pulled back from 104.20 to 103.80 overnight. No fresh news, purely weekend profit-taking. Second, mild risk-on sentiment across European markets, positioning GBP as a pseudo-risk currency for short-term flows. But mainstream headlines are missing the bigger picture. BOE vs Fed policy divergence is widening, not narrowing. Last week's US core CPI printed hot at 3.1%, beating the 2.9% consensus. Markets now price the Fed holding rate steady until at minimum September. Meanwhile, the UK economy is stalling fast. Q1 GDP revised down to just 0.2%. Service PMI missed expectations sharply. Markets are pricing 2 full BOE rate cuts by November. Massive negative carry for pound sterling to US dollar long positions. Look to euro to US dollar for cross-asset confirmation. Stuck firmly below 1.0900, also showing bearish divergence. If euro to US dollar breaks lower, cable follows suit. Yet GBP has underperformed EUR for 3 consecutive weeks on the pound sterling to euro cross. That tells you sterling is fundamentally weak, meaning any dollar bounce will hit cable even harder. Commodity inflation remains sticky. WTI crude holding near 82, gold steady at 1950. Sticky commodities keep the Fed leaning hawkish, inherently dollar positive. The only scenario that saves cable is a sudden dovish Fed pivot, and we have zero signals pointing that way. Tomorrow's US PCE inflation print is the critical risk event. A hot PCE reading could dump cable 80 pips in under an hour. This is the catalyst you cannot ignore. Trading opportunities for today. Now for the setups you came for. 3-tiered strategies for every risk profile. All levels based on current spot price. 1.35870. Strategy 1. Conservative, high probability, low aggression. This is the set and forget trade for low-risk traders. Entry rule. Wait for price to spike above 1.3600, then fail to hold the level. Enter on a 15-minute candle close back below 1.3580. Confirmation of a false breakout. Alternative trigger. Bearish engulfing on the 30-minute chart at 1.3595 or higher. Stop loss. Above the fakeout high at 1.36450. Take profit targets TP1. 1.3530. 1 minute and 1.2 seconds risk reward, TP2. 1.34650. 1 minute and 2.5 seconds risk reward, invalidation. A 4-hour candle close above 1.3650 breaks the bearish structure. Abandon the short bias entirely. Logic. We don't short blindly into resistance. We short confirmed rejection of a obvious bull trap. Strategy 2. Standard, optimal risk reward, my personal go-to. Entry rule. Clean retest of the 1.3600 pivot level from below, with a bearish pin bar or hourly MACD cross below zero. Enter market around 1.3595 once 1H RSI drops below 50. Stop loss. 1.36450, 45 pips, tight and institutional. Take profit targets TP1. 1.3530, 1 minute and 1.5 seconds TP2. 1.34650, 1 minute and 3 seconds trade management. Trail stop to break even once price hits 1.3550, plus 45 pips in profit, invalidation. 1H close above 1.3620 warrants reassessment. Still hold stop at 1.36450. Logic. Trading a clean institutional level, confirmed divergence, stop placed above weekly liquidity. Selling overpriced cable into fundamentally weak sterling. Strategy 3. Aggressive, countertrend scalp, pro only. This is a quick long scalp, only for experienced risk-managed traders, targeting a final 30 pip squeeze before the larger drop. Entry rule. Pull back to 1.3560 to 1.3565, 5-period EMA on 5-minute chart, with a bullish hammer on the 3-minute timeframe. Stop loss. Ultra tight at 1.3545, 15 pips, take profit. Single target at 1.3595 for 30 pips flat. No second target. Critical warning. This is not a swing trade. If you're not in profit and out within 30 minutes, the setup has failed. Only trade when 15 minutes RSI holds above 30 and volume dries up ahead of the final liquidity spike. Failure trigger. A break below 1.3545 lets you flip immediately short with stop at 1.3570. Real talk. 95% of retail traders should stick exclusively to strategy 2. That's where consistent profits live. Before you execute any cable trade, lock these 3 non-negotiable rules. 1. Never risk more than 1% of your total account on a single trade. With a 45 pip stop here, standard lot sizing carries excessive risk for smaller accounts. Stick to micro lots. Point 2. Stay flat 15 minutes ahead of major news events. US PCE drops tomorrow 8:30 a.m. Eastern Time. Don't hold exposure into the print. Point 3. Your stop loss is non-negotiable. Moving your stop just once on cable is the fastest way to blow a trading account. Don't make that mistake. Quick recap. GBP USD's London session rally shows clear technical divergence, weak fundamental backing, and is primed for reversal at the 1.3600 pivot. Overall bias remains firmly bearish below 1.3650. The highest probability play is a standard short on retest of 1.3600, targeting 1.3530 then 1.3465. Tomorrow's key catalyst. US PCE inflation at 8:30 a.m. Eastern Time, the biggest dollar driver of the week. Hot PCE equals 100 pip drop in cable. Cool PCE equals final squeeze toward 1.3650, a gift for short entries. I'll drop live pre-data levels on the community tab ahead of the print. Now drop a comment. Are you bullish or bearish on cable right now? Leave your key line in the sand price level below. Mine is 1.3600. What's yours? If you're new to Alpha Market Meridian, subscribe now. We cover 8 major assets daily, and my next video breaks down gold, where the exact same bull trap divergence is playing out. Don't miss the setup. Trade with a plan, stick to your probabilities, and always manage risk. Alpha out.